This is the Reporter's Notebook, hosted by Elaine Shane.
Welcome to this entry in the DTN Reporter's Notebook. DTN Markets Editor Katie Misick joins us today as we look at the latest results from the DTN, the Progressive Farmer Agricultural Confidence Index. Katie, first of all, how are the surveys done to get this index in the first place?
Well, what we do, we conduct two surveys. We do a survey of producers and a survey of businesses. In the producer survey, we call 500 different farmers from across the country, and we ask them a series of questions about inputs and farm income, and ask them how they think it'll change a year from now, to kind of get an idea of where they feel right now with the ag economy and where they think it'll be a year from now. We do the similar type of thing with businesses. We call 100 different agribusinesses across the country and ask them about how their sales are going and their profitability and what their overall business expectations are. So
what were the overall results?
Well, for the producers, we saw an overall index value of 106.9. And in our methodology, a 100 value is considered neutral, and anything higher is considered optimistic or positive, and lower is pessimistic or negative. And so at 106.9, we still have a fairly strong view of the agriculture economy. We also break that down, like I said, the questions to ask about right now and the questions about the future. And when you look at, the present situation, we create an index for that too. That's 128.1. That's a little bit lower than it was this time last year. Last year was 135.2. And you can really look at the influence of the commodity markets in changing that situation. Last year, a lot of farmers had some high-priced corn in the bin, and that was sustaining their incomes. Now that the old crop corn is worth about 33% less, it's taken a bit of a toll there on the present situation. And on the same time, that change in prices, it was looming last year. There was a great uncertainty about how low could it go. And now that corn prices have settled in this range, in the upper $4.50 to $5 range, those expectations have bounced back some.
Give us more on the trends you're seeing to do with the farmers.
The big ones we saw was the differences between crop producers and livestock producers. I mean, they were very distinct trends, and a lot of that comes down to the market, like I was just mentioning. Old crop corn prices are 33%, 1/3 gone in that value. That makes a big difference for crop producers and their outlooks. And they're also looking at seeing, $4.50 prices for the next couple of years in this range. And so that's something that's hard for crop producers to really handle. And we saw that reflected in their index values. For the crop producer index, they came in at 102.7, which was just the lowest reading we've had for this group since we started doing this survey in 2010. And then when you look at the livestock producers, they were just 0.2 shy of their highest overall all-time score. And then you look at their present situation, it's 145.1, which is just massive. It blows everything else, every other index value we have for the present situation, out of the water.
Now, in the past, we also saw differences in regions. Did you see that this time around?
We saw some differences in the regions, and the real, slide in expectations was in the Midwest, where a lot of our crop producers are. When we looked at the Southeast and the Southwest, we saw that both of those tended to, increase a little bit in optimism. In the Southwest, there were a lot of, the cattle herds in Texas. Maybe there's some expansion or thoughts of expansion going on there. In the Southeast, the poultry industry has been expanding. The hog industry is expanding. So we saw some of the livestock influence in those two regions. So it's just been a really interesting survey this time around for producers, really because of that crop and livestock split.
Let's turn to the ag businesses. What trends did you see there?
Well, in agribusinesses, they are getting more and more confident. They're more confident than they were last year, and they're much more confident than they were in December. And what we saw with the overall index value for them, it was 107.3, and last December it was 102.5. So there was this big upward shift, and the difference really wasn't in the present situation. There was a little upshift there, but it was about expectations for the future that really sort of buoyed and lifted that index up. We found that businesses are much more confident in their current sales, but they also expect those sales to stay the same or get better in the year ahead.
What factors are influencing that?
Well, you look at the price. You look at farmers. They are a little more optimistic about the long term. They've realized that prices are at a level where I can make healthy margins. So their balance sheets have stabilized, and these agribusinesses know that their customers will be able to come back and buy inputs. They might buy a little less fertilizer in 2014 and beyond. This is something that tends to happen and that is a concern out there. But they really do see that farmers are still going to be in business. They're going to need to buy inputs, and they're going to have grain to sell.
Thanks, Katie.
Thanks, Elaine.
With Katie Misick, I'm Elaine Shane, and that's today's entry in the DTN Reporter's Notebook. Thanks for joining us.
This has been the Reporter's Notebook from the DTN Progressive Farmer Newsroom.